Good morning to all of you and welcome to this pre-conference webinar on open banking and customer experience. The conference will take place in February. But today I'm happy to host you. I'm going to moderate this session so that we can touch upon many of the themes that we will come back to in depth in February. Did you start already or no? And I'm happy for all of you here. And you're most welcome to ask questions as we go along. We'll try to take some of them as we talk, and we will come back to questions from the audience in general towards the end. My name is Annette Broløs. I'm a founder and director of Finthropology. Finthropology does research in behavior in financial services. We think that the whole question of customer centricity needs the people perspective, so that's where we come from. Today, I have a brilliant panel with me, and I'd like to invite them to introduce themselves. And David, why don't I come to you first?
Certainly. Thank you very much. My name is David Parker. I'm the CEO and founder of a company called Polymath Consulting, and we work across the cards and payment space. I was also one of the co-founders of Consentus that does PSD2 open banking regulatory checking and runs as the directory in Europe. I also co-founded KYP, which does third-party enterprise risk management, which effectively checks a TPP each time it goes into an ASPSP. I also chair the Open Banking Awards and involved in quite a few fintechs that actually use open banking as well. Thank you.
Thank you, David. Paula, will you go next?
Hello, everybody. Thank you for joining. I am Paula Núñez Ameri. I am the Chief Country Compliance Officer at Citibank, based in Brussels, Belgium. My background is law. I am a lawyer, but in the last years, actually, I have started in this compliance career, and I am really liking it. Looking forward to continuing it, developing and joining many more other events related to compliance. Thank you again.
Thank you, Paula. Anthony?
Thank you very much, Annette. Good morning, everybody. My name is Dr. Anthony Evans. A little bit about myself. I was fortunate enough to play a small, but I hope useful role within the creation of open banking. That's because I worked with the open banking implementation entity for about 3 years, where I had the great opportunity of seeing both the workings of open banking inside and also the experiences of fintechs and banks as they either got their services into production or obtaining compliance. So as part of what was called a testing team, although I'm pleased to say it was more supporting the overall integration. After that, I created a consultancy called Open Banking Delivery, and with the aim of supporting ecosystems and participants across the world. So we've done some work in Brazil, Mexico, Chile, Philippines, and we also, and this is a trend that I think we're going to be looking at very closely, we're also finding, of course, ecosystems are getting very much bigger. It's not just open banking, not just open finance, they're all getting very much bigger. And this is an area that I'm finding really very interesting. For example, I'm working on a startup in sustainability and also potentially cybersecurity, all using open finance capabilities. So my day-to-day job still consists of supporting banks, fintechs, help achieve what they want to get out of open banking, and also ecosystem coordinators. Sorry, I hope that wasn't too long, but nice to meet you. Thank you.
That's fine. And last but not least, Stefan, over to you.
Thank you very much. Good morning to everyone. Hope you didn't have a tough weekend, so you are open to open banking in the morning, in the Monday morning. I spent more than 7 years working in a largest Czech bank, working on open banking, both from IT perspective and business perspective. I was responsible for the open banking team, and lately also not only the IT stuff, but also the business stuff, the business plans and business models. And we've created a lot of interesting products based on open banking ideas. Not all of them were working good, but some of them were working pretty well, are working pretty well. And last 3 months, I'm a solopreneur. I'm working with guys on open banking consultants in the region of CE for banks and fintechs. And finally, I am also an open banking ambassador for Czech Fintech Association, which is great stuff to talk to fintechs directly. So very interested for this talk and discussion.
And thank you all. And for the audience, I think this shows that we have a great broad background from the whole audience that will be from the whole panel that will be able to touch upon many of the questions that we will come back to in more depth in the conference. But I was thinking, as a general flow for this discussion, let's perhaps start with a very general question, move on through some of the basics on the regulation and infrastructure so that we know where we are, and end up having a deep discussion possibly on the business models and the monetization of this area, which are very close to my own heart of innovation. But I was thinking, if we start in a general question, where do you, for people on the panel, think that we are today with open banking and open finance? Anthony, I think I might come to you first, as you already sort of started on the discussion.
Yes, I'm sorry, I kind of fell into that one. But yes, I mean, essentially, the open banking concept, in other words, the infrastructure and the standards, procedures, and so on underlying it, are widely applicable across many industries. This is actually a great opportunity. Many of the banks, probably with some justification, used to say, well, this is fine, we'll join it. You made us join it, but where are we going to make the money out of it? Because they were looking at maybe just payment fees or something like that. And they could see that they may be stuck in a race to commoditization of payment fees, which obviously they weren't particularly keen on. What I think is particularly exciting now, though, of course, is that it's all evolving and more industries are becoming involved. And as I'm sure we'll be touching on later, there are programs in hand to try and support the potential future integration of multiple ecosystems. So the whole thing's getting bigger, which is great. Generally, I'll have a few queries about that later, perhaps. But I think one of the key things, and I think David's input on this would be of particular interest, is it provides many more opportunities for monetization for the major components because they can think more broadly. It's not just payments, it's getting everywhere, if you like.
So, David, that was a call to you. I think perhaps somewhat for later, but where do you think we stand?
Well, I think we actually stand at a crossroads in many places. I think there's a number of different things going on. First of all, Anthony talked briefly about the speed of open banking, and it's interesting. If you look around the world, I would liken it to the tortoise and the hare, with the UK being the hare, and even Europe being a hare, and the rest of the world being the tortoise, because they've certainly, in many places around the world, flown straight past the hare in terms of what they've done. But I think there's a fundamental issue here that we're facing. In many countries, they have followed the UK lead and European lead and made basic AISP, PISP a free service. But let's take a simple announcement and see what the implications are. Apple have now linked their wallet in the UK to open banking. If approximately 20% of Apple users adopt this, just 20%, it would triple the total volume of API calls in the UK. triple. Now think of that for a second. So this is the UK has been held out as a country that's really got really strong open banking, but one company would triple the volume. Now I said to the crossroads because the banks are going to have to put in place infrastructure to support that number of API calls, which is going to cost them millions. Millions. So there's an argument that says, should UK PLC be basically subsidizing American fintech? And by the way, if Apple's done it, how long until Amazon does it? How long until PayPal does it? So suddenly you're going to see your bank accounts at all these places. The volume of API calls it's going to generate is huge. The cost to the existing main providers is going to be huge. Who is going to pay for that? Where are the funds coming from? Because in most countries, AISP, basic PISP, is a free service. And I think we're at a crossroads because moving money and access to data is not free. The problem is because of the way that it was set up in Europe, originally set up in the UK, was to encourage account switching, nothing to do with data. And therefore, Europe sort of took that on and just made it all free. The basic thing they've made free. Sure, there's lots of opportunities when you go to these other premium APIs and everything else. But the fundamental issue, if one company is going to triple the volume, and it's already in millions a year of API calls, what does that do to the economics of the whole sector?
Yeah, it's
I
very
raise that as
interesting
a
you
question.
mentioned. Yeah, it's really interesting you mentioned that, David, because in my time at OBIE, I was responsible for doing the metrics and the projections of volumes. Of course, presumably still, you're more up to date perhaps on this than I am, that the CMA9 may be obliged to scale up their infrastructure to match.
Totally,
because
they are.
it's, yeah.
The scary thing is not just the CMA9, everyone
That's right.
is obliged to scale up the infrastructure, because if they don't meet certain, and as it's coming in now, the API latency and everything else, there are issues, and Apple can complain. Now, in reality, with 90% of accounts being on the CMA9, but people like Revolut, people like Monzo, people like Starling are not part of the CMA9, and are going to have Citibank is not part of the CMA9. I don't think they want to be called out as by someone, Apple, saying we're having problems linking into their accounts. It's a huge issue that no one is forget commercial BRP. That's dreamland. This is today.
I think this is really a great topic to discuss, and I will come back to you, David, because I will ask you what the crossroads are. So usually at a crossroad you can take different roads, so it would be great to dive into that a little bit before we move on. But I'd like to come back also to Stefan, who is wants to connect to this discussion and perhaps add your contribution to where you feel we stand.
Yeah, I totally agree with David that we are on the crossroad right now. On the other hand, I would add one thing which I feel and which I see personally when discussing with different banks, different banking managers. They are disappointed. They are disappointed about the results of open banking for the past years. They were hugely optimistic about what is going to happen 5-6 years ago, and to be honest, at least in the Central Europe, I don't see any great example of a new business model for banks coming from open banking, and therefore they are disappointed, and they see
I've got to disagree with that. Got to disagree with that.
Me too, in a way.
With that.
You go first, David.
Okay, so thin file. I mean, I can't get a mortgage in the UK. I'm a consultant. Now I can, because people use open banking to get my last 7 years credit history. I don't have pay slips. If you look around, therefore, credit scoring, Credit Kudos was bought by 150 million by Apple because it does the credit scoring, and they've now turned it into the buy now, pay later product. So there is significant changes and opportunities, and banks in certain countries are starting to use the credit scoring capability to offer lending and everything else. So I think that's
sorry, David, and this is the really important word, starting. It took a lot of years to.
Yeah, that's just because banks are slow. The fintechs moved ahead and did it. Just don't blame me that banks are slow and lazy. I mean, the fintechs jumped ahead on it. Now the banks are catching up.
Yeah.
So when they say they're
forgetting, of course,
disappointed, my attitude is, hey guys,
Yeah.
if you don't do the training, you ain't never going to be a marathon runner. If someone else comes in and does the training more quickly, of course he's going to run marathons before you.
Yeah, and this is what just one last sentence
Yeah.
to provoke a bit. Now,
No.
from the bank's perspective, and I was working in a bank for quite a long time, right now in open banking, I see that it's open banking was not perceived as a long-term run. They expected short, quick wins. Nothing happened in this term, and they have to get used to it, that it's a long-term change. And this is the crossroad, or this is the disappointment I feel is growing, or is here. And I think it will change once the fintechs will make it as an everyday business for customers. But this is something what is right now changing, I believe.
I mean, if you look at one of the banks in the UK, they already offer you a cheaper mortgage rate if you let them use open banking data.
I believe there's totally different situation in UK versus Central European part.
Yeah.
So I think it would be great if we just had the time to ask Paula where you think we are at the moment, and feel free to bring in also the discussion of the regulatory issues here, because as David rightly pointed out, the basis for where we started on open banking in payments was actually regulatory in Europe. Paula?
Yeah, actually, I agree with David in the point that there is a big challenge, actually, mostly regarding implementation of the new regulations coming in, not only for the payment services sector, but also for banking sector. We have to say and accept that big companies will have the benefit of a big budget and maybe the help of many vendors. But what about smaller, medium companies? Let's say this year that is already coming to an end was an important year for developments in the AI regulations and policy in the EU. As I agree too with Stefan that, for instance, the European Union has a unique IT strategy, while, for instance, US prioritizes the development of global tech giants. The European Union focuses on becoming the sector leading regulator, we can say. So, I mean, I can say from a point of view, Annette, that there will be many more regulations next year's, an increase in enforcement on it. Yes. Let's say the big challenges on the regulations will be tighter security, risks management, crypto, many topics to talk about here. But yeah, in a general point of view, will be that.
But if we stick to the open banking, we started out by requiring the creation of the infrastructure in the payments area, but also we're moving into a much larger space, as both David and Stefan said. So what is the regulation that you see coming up in the next few years that will help move the open banking discussion?
Well, actually, there are many regulations coming in.
Mm-hmm.
We have to say that even if we talk about open banking, finance, AI, the main regulation that will always be talked about will be data privacy. So the Data Act, also the Artificial Intelligence Act. There are the AI Liability Directive, for instance, Data Governance Act. I mean, there are many regulations that will be related to it. The e-privacy regulations, for instance. I mean, Digital Operation Resilience Act. I can mention many of them. But I think the most important thing here is how to implement all of these regulations, because of course, as many technology and many development is coming in this sector, the most challenging it is for banking or payment sectors companies to implement it. I think there is a challenge, not only in budget, also in the concerns about privacy. This topic is huge. technology. For instance, also some big banks can be more old school and more reluctant to, let's say, to be open for innovative measures in this topic, and also, let's say, the difficulty to understand the risks involved. And about compliance, I mean, I coming from the compliance world. The complexity of this topic also is kind of interesting, and I think the role of a compliance officer itself will be a really good tool that can be used. Not only because I let's say you will need to know the legal part, but also the compliance itself. You know, you need to comply with all of the regulations coming. So I think this will be, let's say, my input in this topic.
So coming back to I think perhaps your question, David, what can you be more specific on the crossroads that you see? I do get the point about the infrastructure.
The crossroads we see is in a number of areas, both in Europe and in the UK. There are discussions around things like VRP and how they're commercialized. Okay, and that's great. And there's a recognition amongst most of the merchant and TPP community I talk to that some sort of fee structure is going to come in. But there is also a strong view by merchants and TPPs, I feel, that the existing free services should remain free. And we're seeing that around the world. But the problem comes is when the volumes start to go ballistic, fundamentally, it costs money to move money. It costs money to access data. Who should pay for that? It's a very simple question. It's very simple. Nothing is for nothing. So on the basis that today merchants expect that get paid out of a bank account for nothing, who should pay for that? The consumer? Great. Okay. It works in countries where banks charge for current accounts. Okay. In the Netherlands, in Belgium, they charge for current accounts. In the UK, they don't. Okay. There are fundamental differences in banking around Europe, and therefore it changes. But Stefan, you...
Yeah.
Just want to point out that in this topic, and I agree with you that this question is not answered. On one hand, open finance regulation, FIDA, is coming to make this topic even broader than right now. Many more institutions, many more companies will be covered by this kind of regulation, and I think this question will become the most important one. Because somehow in the regulation, at least in the working draft being discussed right now, there's a possibility to somehow monetize the APIs, but wouldn't be a mess how it will be synchronized, this kind of monetization approach. I think this is the most important question, not the infrastructure one. I think we've learned a lot in terms of standards and how to improve infrastructure, but if we don't see money behind, it will be really, really tough. And I'm not talking just about banks. I'm talking even about fintechs and all the financial companies.
I think there are a couple of aspects. Stefan, I mean, first of all, I'd like to address your statements about the disappointment within Europe. There was, much less now, a great optimism that all you had to do was to put all the pipes together and allow data to flow and everything would be fine and everybody would make money. Clearly, in retrospect, that was extremely naive. Europe also, of course, historically got off to a somewhat glitchy start because of the lack of enforcement around the standards and validations, so that actually when you tried to put it together, everybody had built slightly different size Lego bricks. So it was really quite difficult to put it together. So that slowed things down. But one thing I noticed in particular, actually, in Frankfurt last year at this the Kinfos meeting there, when I realized that there's a whole host of islands of services being developed using this kind of infrastructure, which are available to be plugged in as the open finance ecosystem itself evolves. So I think that once that starts, as those islands become aggregated, the growth in the ecosystem is going to be relatively rapid, certainly compared with the past. And banks maybe aren't going to make money out of moving money very much anymore. So NatWest Bank, okay, maybe in future it'll just be NatWest. You know, the banking is the bit at the bottom, the commodity bit, and where they make their money is in the value add services by broadening the scope of their services.
That's interesting, Andy, because I disagree with that, you see, because I think that where banks will make their money, see, where banks will make their money is being a bank. And what do I mean by that? Fundamentally, no one else can hold funds. It's quite simple. No one else can hold money other than a bank.
Yeah.
And banks like to talk to other banks generally. And it's the wholesale side. I mean, Bill Gates saying no one needs banks, just banking, is very true. The actual underlying infrastructure, okay, of what banks do, okay, treasury management and all that type of stuff, is going to be around and makes the banks that do that, like JPM and Citi and the big wholesalers of this world, a lot of money. Okay, so if you look at what I call the thin layer banks, and there are a number of them out there, there are many thin layer banks that sit on top of others. They have harder. I always think of it to the wholesaler and the retailer. Who makes more money, the wholesaler or the retailer of the baked beans? The answer is the wholesaler normally.
Stefan, you had a comment as well.
Yeah, I totally agree with you because I believe that the crossroad, which David also mentioned, is about what kind of added value service will I as a bank provide. And this is right now the question. I think fintechs are trying to steal from a bank a bit of value added services, and banks are right now discussing, what kind of company should I become?
Yeah, I think it's interesting also the point that you were talking about the access to data. I find it super interesting, this topic, and wow, we have a lot to talk about it. Who should own this data? Who should have access to? I think the best idea will be to harmonize and to work together. As you said, Stefan, fintechs, financial services companies, the state. So I think we should go in that way.
I think actually you're all illustrating the point that our financial intermediation is fundamentally changing at the moment and likely to change even more in the future, but that's for another panel, I think. But because, and which also is a question of we'll be reflecting on what kind of regulation do we need to have in place to monitor how things are moving and whether infrastructure is satisfactory if it's going to be used as a standard. So maybe one of the things that we should touch upon before moving deeper into the business models in this area is the fact of the importance that for customers that there's a good kind of security in this area, and we have seen quite a number of examples of fraud as well. I don't know, Paula, if you'd like to add a comment to that question of security.
Yeah, I mean, I think definitely, well, yeah, security is a big challenge here. Data security, for instance, that was this topic just now touched. Definitely, there are many challenges in this way, and normally I think we need to prioritize, as you said, the customer. It is our main objective to protect the customer and to help them have this life easier. So I think we need first to understand which are the risks involved, and then each bank should develop the best system in order to overcome this issue and to try to, try to give the best service and comply with all the regulatory compliance laws coming in, as I mentioned it already. I don't want to bore you more about law, but definitely this is a big this is a big fight, I think. And for me, the main challenge, as you already mentioned, is the data. And I find it super challenging, because also who should own it, and then there should be like an harmonization in order to know where to go to find this data, to be available for everybody. And sometimes there is an issue of communication and the lack of cooperation, and I think cooperation is the key term here, between banks, between fintechs, and work accordingly, the rules, data protection, privacy, legal framework. Yeah, that would be it.
Any of you others want to comment on the security perspective, or perhaps who's going to bear the cost of providing sufficient security?
Well, you see, this comes down to the same point. You talk about security. I find it interesting, as I said. So in the UK, certainly the vast majority of high value payments fail today on open banking, vast majority. And it'll be interesting to see how the regulators address this in the new JROC report that's coming out, because it's something they've talked about. In Europe, higher value payments are going through to a greater degree, but still not that much. So I think the security in a number of different aspects. The security is in fraud prevention and fraud. The security as in TPPs, because don't forget, the EBA still does not have a searchable directory, and it's not up to date. In fact, they have a disclaimer on the homepage saying don't use our directory, it doesn't work. So there's that side of security. The security around bank APIs and how much they're up and everything else. So security is such a broad term. So which bit of security? You know, are you talking about the security of enabling? You know, one of the things that the retailers have been pushing for, and I know many places in Europe, is confirmation of payment. So we're not saying the funds arrive, stress that. We're saying to a retailer, you can feel confident letting that person walk out of your store or your e-commerce website because you've received confirmation the funds are on the way. Whether they've arrived is almost irrelevant. It doesn't matter if they arrive in 10 minutes or an hour, but there's no confirmation of payment made. Okay, so that you could argue security of the transaction. So there's lots of issues around security, and I'm going to push back and say, which one do you want to talk about? Because they all have issues.
I would like to have you mention the important aspects of security in a general way. So I could say all of them, I could say some of them, but I think that you make the point that the security relating to the performance in transactions is related also to the infrastructure. So clearly that's part of it, and then there's specifically how you put security in place for your customers as well. I don't know, Stefan, would you like to comment on security as well?
I think from my perspective, just one thing that I believe that the whole banking security is an issue. I don't feel that particularly open banking should be in terms of security should be somehow stressed out, because as banking is going digital and more digital, I don't see any particular reason why we should point out particular open banking in terms of security. I would say everything in terms of banking and security is a hot topic.
I think that's an interesting point, Stefan, in that fraud will happen under virtually any circumstances. My personal feeling is that the architectural infrastructure behind open banking with FAPI compliance and so on is that's generally okay. Of course, all the problems come in when you get people involved and organizations, and that's where we need to look more closely. And in that case, of course, it's very close to the same sort of requirements that you would have around cybersecurity. And security causes fraud. I suppose so we need perhaps to differentiate.
You mean
between
lack of security causes fraud?
Well, that's a fair point. Yes, I think I'll go with that, David. And so that's now what was thank you, David. You completely threw me. But Yeah, it is very close to cybersecurity in terms of the requirements and the procedural stuff around it. And of course, every new service can often have unintended consequences. So instant payments means instant fraud. That's a whole new industry. Actually, coming back to the regulatory side of things, I had some very interesting conversations with colleagues in Chile some months ago, where we came up with the idea of a potential brake, BRAKE, on services as we deliver a new service. If a potential vulnerability, procedural or otherwise, is identified, okay, guys, let's hold that we'll stop rolling out. We've recognized that there's a problem, there's an unintended consequence. Let's hold it back on consensus of the overall industry, and then address and progress. And it could well be, for example, that some of the things around instant payments, had such a regulation been in place, might have slowed down. Hypothetical, don't know for sure, it's never been done. But I think planning for unintended consequences in developing ecosystems might well be worthwhile incorporating.
It's quite an interesting perspective and something is also related to customer habits, isn't it? I mean, we did a large study in Brazil shortly after the introduction of the PIX and an instant payment solution, and we found that, contrary to our expectations, there were loads of people who were claiming that banks were not taking action on missed payments when you pay to a different phone, the wrong phone number, the wrong person, or even you put the wrong amount in. There was no way to go to have your money back. So there's also a question of what are the customers expecting here. So one thing is that if there's direct fraud, another thing is how to clear up faulty input sort of in instant payment. So that's another perspective.
Yeah, I think that's a really interesting one. I think both David and Stefan and probably Paula would have a fair bit to say about the liability models behind payments. There's a big issue behind that.
You're nodding, Stefan?
I agree. I think PSR, as a new regulation, is coming to address a bit of this topic, and I see that banks are not happy with that. And to be honest, I'm not sure what's the border between educating people and refunding them lost money. I don't know where the clear border is. And
well, I don't know how many of you saw the comment I posted from a previous event by Chris, who is head of the PSR over here in the UK, because the PSR over here in the UK has argued that when on push payment, it's 50% from the push bank, 50% on the receiving bank. And I've argued for a long time that doesn't work. That's a charters fraud. And what we actually need is 30% of liability goes to the social media network, 10% goes to the consumer or end user, and then 30% for each of the banks. And at least then everyone has skin in the game. When I raised that to Chris at an event, he actually responded by saying, yes, actually, in principle, I agree with you. I don't know, have the regulatory power to enforce today. Simple fact is that only when people have skin in the game will they actually bother to care about fraud. And so until social medias, let's say pay 20, I'll be nice, pay 20% of the fraud. Guess what? You suddenly make them pay 20% of the fraud. Watch how quickly Amazon Marketplace is cleaned up. You tell a consumer, no matter what he does, he's going to pay 10%. Watch how quickly a lot of them now say, oh, actually, I will just maybe double check on this transaction or something. Okay. And sure, it's easy to get the money out the banks, 30-30 or 50-50. But the real change will come when everyone in the process has skin in the game. Simple.
I like that, David. Hope you don't mind if I propagate that notion.
I said, have a look. Chris from the PSR actually came back with a quotable quote saying, in principle, I don't disagree with what you're proposing here. I don't have the regulatory powers in effect to implement it, but I will be starting to highlight, which they have done on the last report, on where fraud is and everything else coming from on this. So, you know, my preferred choice is actually a 20% social media, 10% consumer, and 35% for each of the banks. And you know what? I think at that point, you'd get everyone in the value chain actually paying attention to fraud and actually caring about it.
But I think this is a great idea. I would just vote for that. But I think it won't stop there, because once you see the frauds how are being done, web hosting companies should be taken.
No, that's what I'm saying. Social. So okay. So I'll give you an example. This really, Chris pulled up an example. He said he had a telephone fraudulent come through on his telephone. And of course, he did all the details, and he then decided to go to his mobile phone company and report it. Okay, so he went to the mobile phone company, this is our head regulator, to report this telephone number where it came from was fraudulent and they should take action. And it said, please feel free to report any frauds numbers you have calls from here. However, we're very busy and won't take any action. Okay, this was the perfect example of the regulator realizing what the problem is. So guess what? I think we're going to start to see some action in this area.
It's very interesting perspectives, actually, and also how to actually sanction. But we need different structures in place on the regulatory infrastructure, I think. Paula, do you want to comment on this?
Yeah, I mean, what all you're talking about is cybersecurity. You know, currently the European Union is working on various fronts to promote cyber resilience, fight cybercrime, boost cyber diplomacy and defense. It's a great challenge, you know. I think there is a great and big response to this kind of cybersecurity challenges, you know. I mean, there are critical sectors here: finance, transport, energy, health, have become increasingly dependent on digital technologies. And I think in this topic, we have to rely on this kind of technologies also to help us to run this fight against cybercrime. I think while digitalization brings enormous opportunities, also provides many issues as well. What we were talking just now. I think cyber attacks and cyber crimes are increasing in number and sophisticated ways across all Europe, and I think that trend is this to grow and grow in the future. As you can know, many billions of devices worldwide are expected to be linked to the internet. So here a must is a stronger cyber security response to build an open and, let's say, a secure cyberspace, and that can create also trust, you know, among citizens, among customers. We are talking about in digital assets, in digital tools and services, you know. So normally, well, I mean, normally the EU leaders, what they want and what they should, you know, be doing is to protect customers, citizens against cyber threats, provide us a secure communication environment, especially through, I don't know, encryption, many ways, you know, access to data for judicial and law enforcement purposes. So, I mean, this we have to be going on this EU cybersecurity strategy. So, and the aim is here to strengthen the Europe's resilience against cyber threats, and ensure that customers, business also, of course, can fully benefit from trustworthy and reliable services and digital tools. So let's say that the new strategy contains, let's say, should contain concrete proposals, you know, for deploying security investment and policy instruments, you know, for sure. So yeah, let's say we have to go on that way.
Thank you. So I'll remind the audience that you're welcome to ask questions if you like. As we go along in this discussion, you are likely to get great answers, I think, from the panel. And let's perhaps move into more of the business models. We've already touched upon it because, of course, everything is interrelated in this area. So we can't just talk about regulation or security or infrastructure and not think about the monetization. But I don't know, Stefan, would you like to start commenting on the business model that we see developing in these areas? Include partnerships if you like. Yeah.
Well, I would split this question in two parts. Yeah. One part is what are the business models on new products fintechs and banks can leverage from using APIs, and the other part I would stress, and I think I would start with, is third-party cooperation. And this is truly what I believe open banking and open finance in general is bringing into the industry, is cooperation among many kind of companies. And this is where I believe are the easy money, I would say, or quick money from the cooperation point of view. I know that many banks are thinking about, hey, should we create a super app from our mobile banking? Should we incorporate more third parties? Start working on different value-added services, as Antonio mentioned already before. And I'm glad that at least from this part, open banking is playing a huge role in discussion about the future of banking strategies, as I see it right now. When discussing in terms of APIs, I think still all the parties, and it was already mentioned, due to the lack of standardization. I mean, overall in terms of Europe, one standard which is working pretty well in terms of one Lego brick, as Anthony called it, is being used. I think this will take a longer time to create it, and of course we can't forget about the customers. Customers should need to get used to it, to the using services out of the standard internet or mobile banking. So that's it. API is quite tough right now, but third parties cooperation, I think it's great thing coming from open banking.
What do you think, Anthony?
Sorry, lost my mouse. Yes, I like what Stefan's saying. It's right. Monetization is important, not just to enable a business model, but something maybe we'll be touching on before long, if we have the opportunity, is bringing in people who might otherwise be excluded. That can sometimes involve a cost. So ensuring that there are margins, profitability, enabling, and I can go back to the point that as the ecosystems get bigger, then provided your organization is sufficiently adaptable, and this is important for the large banks because of course they tend to be quite slow, then they'll have the opportunity to change, to introduce new services that might not otherwise normally been within their remit, and they're able to make money from those new services and not rely so much upon the basic infrastructure. Bearing in mind David's absolutely correct points, I think, though, about there are some things that banks do that nobody else does, and it's essential. David, do they make money out of those components at the moment?
What, the basic the wholesale services, you mean?
Yeah.
Look at JP Morgan.
Okay, fair enough. Yeah, that emphasizes the point quite nicely. That's fine. So they're certainly going to want to hang on to that. But I think the opportunity for diversification is there. There are a lot of cultural issues, I think, behind banks needing to adapt. But this is where perhaps more dynamic combinations of innovation, typically coming from fintechs and other organizations, can then be work in collaboration with banks to allow them to move a bit more quickly.
So in principle, on the one side, we might see banks and other players introduce new services that they could monetize because they're new and they're attractive, but we might also at the same time see them keep up existing services, but
Yes.
provide them for free or provide them in a broader or more appropriate
right.
sections, which is
Yes.
what we're actually already seeing, that solutions are being specialized towards different groups. So
Yes.
but we are still at the point where we say we might see, except perhaps for the so one of the things that's interesting is when customers turn to use the APIs still more to their own ideas and developments, will they be likely to pay for the access through the APIs to manage their own data and their own structures, do you think?
Yeah, well, that's an interesting. I think that kind of touches on some of the points made earlier, that when money's involved, they'll do it. They'll do something when money is involved, or they'll expect something when money is involved. So I think that's going to certainly be there. But maybe as well, let's bear in mind that the payment world, if you like, is changing as a result of the availability of open banking, which in itself could create whole new services that people are interested in and will continue. So maybe the basic components are arriving to enable, and I suppose VRP might fall into this category, which enables the development of whole new services that nobody even imagined. And I must admit, I'm not really very good at putting forward examples of that, but one that I quite liked, and I wish I could stop referring to this one because I'd like to see more of it, is an insurance company, By Miles, where you simply pay pretty much on a daily basis, if necessary, for your insurance based upon the number of miles that you've driven. Now, that's totally different from the here is your annual payment, now you can go and drive as much as you like. It's binding the two much more closely together, whole new service, and it's not something that we would have anticipated before. So yeah, so nothing
mobility
definite.
is a really
but...
great area for examples. You're absolutely right. David, do you want to add a comment to the monetization? And then otherwise we have a nice question that I'll ask Paula to comment on.
I think monetization, bluntly, it's interesting. The SPA network in Europe can't even agree and hasn't published anything on VRP. It's fundamental. Yeah. So you're talking about something which is the smallest step away from what is currently being today, and there is no agreement on how to effectively monetize it, between the ecosystem. It's the smallest piece. It's just VRP. It's just one small bit further away from single payments, regular payments. And yes, we are seeing a couple of premium APIs, but the European side, when you move to open finance, which is the next big step, how's that going to be commercially structured is huge. And I think it's going to be very interesting to see where JROC goes on this in the UK, with their report due to come out over the next 2 or 3 months. But Stefan, you had a comment.
Yeah, just a short comment, because I know that there's a question from one of the attendees, but I would just wanted to say that there's a difference between retail and the company's approach in this way. SMEs, I see, are using APIs quite actively because they are saving money. It's really so simple. They're getting rid of accountants. They're using ERP systems connected via APIs to the bank, and a lot of stuff is happening automatically. And this is the difference between retail and SMEs. In retail, I don't see that traction.
Right. As you said, Stefan, we have a question that I'd like to ask to Paula from the audience, asking a very broad question that I trust you could perhaps answer in a sort of overview way. I'd like to know more about the FIDA regulation and how it's going to look like. So that could be a very large and long discussion, but I'm sure you can sum up the main issues for us before we move on to comments from each of you.
Well, this is mainly related to data. Again,
Yes,
I said,
exactly.
I think since the beginning of when they was talking about that, I think it's a big topic. So normally this FIDA proposal, FIDA law, is what the aim of is to establish a clear, let's say, regulatory framework to make sure financial services customers are in share of their data. Of course, as you can imagine, customers are kind of sometimes are wondering what they are, these big companies, these financial big companies, financial banks, payment services companies are doing with my data. So actually, definitely, I can say that the European Commission actually during this year was putting forward, let's say, a proposal for a regulation to further digitalize, let's say, and improve competitiveness in this sector. So normally this proposal of FIDA, which is actually for, I don't know if you wouldn't know what it means, it's like financial data access framework, is a let's say a direct response to developments in the European payment services. Definitely, it will mark, I think, a special direct influence in this open banking services. So normally, yeah, definitely it is, of course, as any other regulation related to this topic will be really helpful. But definitely data is a big topic, how to control this, who should own this data, and also the quality of this data, who should have access to this data. As you know, as Stefan said, cooperation for me is a key term. Cooperation between financial companies, states, and regulators to work together, and then keep going with the demands of the customers too. So I think it is important to give customers the ownership, of their data and control of their data, and let them decide, where they will, what they want to share, what they shouldn't share, and help them, to decide and effectively limit its use in a negative way, we can say. So yeah, I mean, that will be my response.
Thank you very much for throwing some light on a very big question that's going to develop and take some time over the time. I think we're coming to the end of this panel already, which we could have spent quite a lot more time together on some of these subjects, I think. But I'd like to ask each of you to spend perhaps just a minute on talking about what your biggest expectations are for the discussions we can have at the conference in February. So who should I start with? Why don't I start with you, Anthony?
Thank you. Well, it's always such a great event, such a wide diversity of individuals that I don't often have the opportunity to meet, because within Europe, I'm often UK sort of centric, if you like, and that's not always very good. So it's the variety of ideas that we are going to be hearing, the observations, the expertise of everybody, not just the participants on stage, but the expertise brought by the attendees as well. I learn a great deal at such events. I may be hopefully able to return the favor on occasion and provide some expertise which is of value to others, but I find the whole event really valuable, really interesting. So we'll very much look forward to it.
David?
I suppose for me, what I'm always looking to get out of these events is market understanding and views. Merchants, TPPs, banks, where their current heads are at, where they're going. As I said, SPA still hasn't set VRP. Is that even going to happen next year? In order to move things forward, I'm always interested in understanding where things are going, and also where regulators are coming from and where they're seeing things going in the near future. Because ultimately, if we're not moving forwards, we're moving backwards. So we need to be clear on what path we're moving forwards on. I'm just trying to understand what everyone wants to move forward on.
Yeah.
Stefan?
Oh, well, I'm really curious about the perception of open finance and monetization, which I believe are the most important question to me, at least personally right now. So I'm looking forward to discuss these with different players, different companies, and different individuals. Looking forward to it.
Paula?
They say open banking is driving the future of financial services. So I think I would invite you to join this event and learn more with us together and have a great discussion. And definitely, I will give an emphasis on that, the role of the regulators and the role of all the financial service institutions, and also, of course, the role of the customer in all of this. Yes.
Thank you so much for bringing all your knowledge to the panel and for taking this discussion and being so passionate about it, which is what makes a good discussion and a good panel. So thank you so much for doing that, and also for showing the way towards the conference, because I think that's at a point where things are changing as fast as they are. It's really great to meet with different players and hear different perspectives, because that's really what you sometimes need when things are unfolding and changing as you walk. So you're sort of laying the road as you walk on it, which is quite risky sometimes. And the dates 14th to 15th of February in Berlin, so it should be accessible for many people, and I look forward to it. And again, thank you so much for taking the time to be with us in the audience.
Thank you very much. It's been a pleasure.
Thank you. Yeah, likewise.
Thank you very much.
I think monetization is going to be a key topic.
Yeah.
Well, you see, you say monetization. I think it's fundamental. Do you mean monetization or covering the costs? Two different things.